We start this week with Libor trader Tom Hayes, who's been jailed for 14 years. Is the long sentence a just punishment, or to keep him from giving evidence to journalists and the courts about his managers and directors that knew exactly what he was up to? Billionaire bosses at RBS, Royal Bank of Canada, Citigroup and Union Bank of Switzerland. We heard on this show from former US Army officer Scott Bennett a few weeks ago, UBS was channeling secret money to ISIS just before he was sacked on trumped-up charges. Too big to jail banksters. Is that why Tom Hayes wasn't allowed to turn Queen's evidence? Anyway, I'm joined on the line now by financial journalist at the Scottish Sunday Herald, or Scottish Herald, or Glasgow Herald, Ian Fraser. Hi, Ian, and welcome to the Politics Show.
Hi, Tony.
Tell us a bit about the Tom Hayes case and give us your assessment as to whether it really is a great success for the Serious Fraud Office, as we're being told.
Well, the Serious Fraud Office clearly has had a few setbacks in recent years, and it's failed with the Chenguez brothers, or they ended up suing it because of a botched inquiry into their affairs. It's meant to be the lead prosecuting agency for financial fraud, for white-collar crime in the UK, but it's probably seen as not having taken enough scalps. So the fact they have successfully prosecuted Tom Hayes is being presented by David Green, who's the head of the SFO, as a major coup. And he sees it as something that's going to ensure the survival of the agency, because its future has been in jeopardy. And I think that Theresa May wants to merge it in with the NCA, which is the National Crime Agency, formerly known as the Serious Organised Crime Agency, I think.
Oh, yeah, that's what they're calling Britain's FBI, isn't it?
Yeah, that's right. That's right. But, I mean, it's difficult to say with Tom Hayes. I mean, clearly he was, in terms of implementing the rigging of Libor, which is a massive crime. You know, it's described as the largest felony in the history of the world by William K. Black, professor at an American university. And in terms of people who were actually implementing it on a daily basis, he was doing that, and he was the ringleader. So the fact that he has been banged up for 14 years could be considered to be, you know, inverted commas, a good thing. But you're right, there are people higher up within UBS and within the other banks where he worked, which included RBS and Royal Bank of Canada and Citigroup, who were aware of and who condoned his activities. And in UBS there was even a manual which was called How to Rig Libor, which I believe existed before he arrived at the bank. So it wasn't as if he was some rogue trader operating in total isolation, which is often what people try and pretend in these sorts of cases. He was given a larger golden hello and larger bonuses by each of the successive banks for which he worked.
Now that's interesting, this whole business of a manual of how to rig Libor. How can he possibly be a mastermind if he's actually being handed a manual on how to commit this fraud?
Well, that's a good question, and I'd actually need to check to see when that manual was first created.
Well, I don't think there's any implication that Tom Hayes wrote it. I mean, he was handed this. He said, look, this is what they gave me when I arrived at the bank.
Yeah, I mean, I haven't seen the manual. It was something that was mentioned in the court case.
No, maybe anybody that sees it would be, you know, it should be one of those banned books or something, because it's clearly, and you're absolutely right about the depth of this fraud. But what I'm trying to get to here is, I mean, there's been quite a lot. Part of his evidence, Tom was saying that the German markets chief, he's the guy who's now in charge of the entire German stock market, a guy called Carsten Kengeter, chief executive of Deutsche Börse now he is. He sat in on the meetings, this is what Tom Hayes said, and at those meetings, Libor manipulation was discussed, according to evidence given to the Serious Fraud Office by Tom Hayes. So, I mean, surely if these senior people are in on these meetings where Libor rigging is being discussed, where perhaps manuals on how to do it are being handed out, surely these people are part of the conspiracy and should be prosecuted too, not just one Tom Hayes.
Yeah, I totally agree they should. One of the problems in banking is the deniability factor becomes higher the higher up the ranks you get, because at the top of the banks, you know, they will only be have a passing knowledge of that area. So it is a problem as far as the actual nuts and bolts of putting a prosecution together are concerned.
Yeah,
No doubt it is harder to prosecute the so-called low-hanging fruit,
Yes,
which
well,
are people like Tom Hayes, than it is the ultimate bosses of UBS.
but I mean, he's made it clear that at UBS, quite possibly at the other banks that he was in, that there were that there were some of his managers who were in on these meetings. And also these people were hiring him specifically because they knew he had a reputation for being able to rig LIBOR. Surely that makes them part. This is what I'm trying to get at here. Surely that makes them part of a conspiracy, because it seems, how can you have a conspiracy where only Tom Hayes has been prosecuted?
Well, you won't. I mean, David Green, who's the SFO guy, gave an interview to The Guardian in which he said they will be going after, and I don't think he gave a number, but I think it's about 12 other people who either work for UBS or other banks, including RBS and Barclays and HSBC, I would imagine, because they've already done regulatory settlements at a group level over LIBOR rigging, and brokerages including ICAP and what they were called, Martin. There's one called RP Martin, I think it's called. So there will be, as far as I'm aware, according to the interview that Green gave to The Guardian, there will be other people being prosecuted for the same or similar offences of trying to rig LIBOR. But my fear is that they will focus on the trader level of people rather than their bosses. And I agree with you, it's wrong, it's totally wrong, because the bosses are implicated because they knew it was happening and they made no attempts to stop it, and they benefited financially both in terms of their own bonuses and the profitability of their banks.
Well, I mean, depending on what witnesses say, if they're in on meetings as well. I mean, this is, I found, for me, the most shocking revelation this week is digging into this story and finding that this guy who's the head of the chief executive of the German stock exchange is sitting in on meetings with Tom Hayes as this is going on. I would have imagined that there would be, that he wouldn't be just standing there if he was making notes, that he's actually involved in the whole thing.
Yeah, well, that's right. I mean, is there any clamour in Germany for this guy to be prosecuted or to be fired from his job as the head of the German Stock Exchange?
Well, no, there isn't. No. In fact, there certainly should, and also maybe it's something to do with the nature of these sorts of crimes that you've mentioned there, Ian. That this is one of the biggest crimes ever in the history of the world, or whatever.
Yes.
That could you just explain to us what is the LIBOR rate, and to what extent ordinary people like you and I, maybe people with mortgages, with bank loans, get affected by the crimes that Tom and his co-conspirators were perpetrating?
Okay, well, LIBOR is a benchmark which is set in London. That's why it's called. It stands for London Interbank Offered Rate, and it was set up in about 1988 to sort of formalise the rate at which the larger banks were lending money to each other, and it underpins about 350 trillion of loans, mortgages, derivatives, and other financial instruments. So it's the kind of benchmark against which a huge amount by value of financial products it's the benchmark interest rate, which underpins a huge number of financial products worldwide. And I think basically the way it affects us is it's quite difficult to know exactly the extent to which the rigging that Tom Hayes was responsible for would actually affect the price that you pay on a UK mortgage. But if, for example, he was nudging it up on a particular day, if it's a floating rate product, then that would increase the cost of the loan on that day. If he was nudging it down, if he was successfully nudging it down on another day, it would actually make the cost of that product less for the consumer or the end borrower. So, it's hard to explain exactly how it affects people's day-to-day lives, but it does. And if it's corrupted, as it was according to the regulators, between 2006 and 2010, although a lot of people believe it was being rigged long before that, then, it's kind of like undermining the whole, the fundamental benchmark that's underpinning all these financial products and making a mockery of it, really. Because for a start, on short-term swap trades, the banks can profit. And as anyone who's read the regulatory settlements that the U.S. regulators and the U.K. regulators published between 2012 and 2013 with the various banks, and there's about 12 of them that settled on these matters. You can see they were doing it in order to basically fleece their counterparties, or their investors with whom they were trading, because they had a hidden secret, which was they knew what the rate was going to do the next day. Therefore, they could make a spectacular profit on certain types of complex financial products, and essentially fleece their counterparties, the people with whom they were trading.
Well, effectively, that's us down the end of the line. Also, this does indicate. I mean, Mark Carney, of course, is from the Royal Bank of Canada. And one of the people that was one of the companies that Tom Hayes was working for. I wonder if they ever had a little chat. You don't know, do you? And if he did, was Carney also possibly one of these co-conspirators? But I mean, I
think that's. I don't think that's accurate, because I think Carney was at the Bank of Canada, which is the central bank.
Not the Royal Bank of Canada.
No. That I'm aware of.
Lucky for him, Mr. Carney. Then well done. He's in the right bank at the right time. Also, I mean, there was another brilliant article I thought in a publication I'd not come across online before, eFinancial Careers, which points out the people who are named as the co-conspirators with Tom Hayes and what they're doing now. One of them, named Mirat Aliklov, one of the journalists from there, Sarah Butcher, traced down. She said, while Hayes is languishing in a cell, Aliakov seems to be getting on with his career and having fun. He's also recorded as a CrossFit athlete and has been participating in executive fight nights. And that's just a brief trawl of the internet, looking for what's happened to some of the other people who were accused at the same time as Tom was.
Yeah, Sarah Butcher is a good journalist, and she, that was a very interesting article because, to an extent that showed the injustice of it. They happen to have singled out, Tom Hayes, and presumably some of the other ones as well. But there are others who are just as culpable, or perhaps just as culpable, who are, enjoying their freedom.
Is there any prospect, do you think, of more senior people who are actually making bigger bonuses than Tom Hayes was, for example, senior management directors of these banks actually going to jail? Because there are, for example, the Rona Fairhead, from the chairman of the BBC, she's also on the risk committee of HSBC, and she's been accused in a private prosecution in the United States for money laundering as well, the Daily Mail announced last year, because it seems that it's not just these individual cases to do with maybe foreign exchange or LIBOR, but there are other problems and maybe more serious money laundering you might consider more serious than the LIBOR fixing.
Well, I think one of the worst problems since the global financial crisis of 2008 is the failure to prosecute senior bankers who were to a large extent responsible, and who were in some cases clearly committing fraud. And it's one of the biggest running sores that the UK, US, and other developed markets have experienced, I think, since the global financial crisis, is the lack of appetite of prosecutorial agencies and Department of Justice in the States and the SFO here to go after the top guys. And that it was different after as Bill Black will tell you, it was different after the saving and loan crisis in the US in the late 80s and early 90s, when chairman, chief executive, and chief financial officers were prosecuted, and largely of smaller banks, it has to be said. And many of them did end up in jail. I think it was between 1 and 200 senior bankers ended up in jail after the savings and loan crisis of the late 80s and early 90s. So something changed in the mindset of governments and of the justice departments and prosecution agencies during the 90s and 2000s, which for some reason meant that they didn't even bother to investigate, let alone prosecute more senior people.
I mean, if this carries on, effectively, you're bound to end up. Maybe we've already got a criminal elite, people who simply are too rich to jail.
Well, this is a key problem, and I mean, I think we've seen this to some extent with HSBC, with its money laundering settlement of December 2012, when it handed a check for $1.9 billion to the U.S. authorities, including the Justice Department, as part of a deferred prosecution agreement, and the chairman who oversaw the bank at the time the crimes were committed, who's called Stephen Green, was not penalised in any way, but instead he earlier became a lord. He was made a lord by David Cameron, and he was appointed trade minister by David Cameron. Obviously, there were other things going on in HSBC which were criminal at that time, including the activities of its Swiss private bank. I'm sure you know all about that. But yeah, no, it's just totally unjust, and you begin to despair after a while. But from the perspective of David Green at the SFO, he probably thinks there's a lack of political appetite to go after the top guys, and he also probably thinks that he has more chance of a successful prosecution if he goes for the people lower down the pecking order.
But you start to wonder, don't you, whether some of these people who are getting massive bonuses are not getting prosecuted are then donating money by whatever means to the ruling party.
Well, yeah, that's going on, certainly. A lot of hedge funds have given a lot of money to the Tories, is that bribery? I don't know. They may just say, well, the Tories are more likely to implement free market policies with which we agree. But, it certainly has helped in certain cases.
Also, I noticed Goldman Sachs offered Tom Hayes a $3 million. They don't like to be out of the fun when there's criminality going on. So they offered Tom Hayes $3 million bonus just to quit UBS and to work for them. So Goldman Sachs were after him too. I
know, but do you know why he didn't go there? Did they just decide he wasn't quite good enough at it, or what? I read the report about it was during the court case that came up, and I'd like to check as to the reason why they didn't hire him. Maybe they found that his crimes were too obvious.
Well, it's possible. I mean, also, I know that UBS made some sort of quiet counter-offer to him for him to stay.
That's quite possible too, yeah.
Old Labour Oxford economist Martin Summers, we're getting pretty close here to a kind of oligarchy, aren't we, where you've got super-rich bankers and their friends simply paying political parties to make sure that they don't ever get prosecuted, and actually that means that they are way above the law.
Well, it's strange, this case, isn't it? In general, I'd prefer to see individuals named rather than, as in the HSBC case, the organisation pays a fine, but the individuals who actually carried out the money laundering obviously weren't prosecuted. But in this case, you've picked on an individual, Tom Hayes, or they've picked on an individual, Tom Hayes, and you could argue that in actual fact Libor fixing is an institutional crime and that the institutions should pay. I mean, for example, lots of local authorities all over the world, Detroit and so on, have lost an awful lot of money through these interest rate manipulations and are now supposedly bankrupt. Surely the private sector banks which carried out those manipulations should have their assets seized in order to cover the costs that so incurred.
As I said, it looks like we're sitting in the situation where we have effectively got an oligarchy of the super rich who are paying politicians through political donations, this kind of thing, to keep them away. And the politicians obviously are having some influence over what the courts are doing, the justices are doing, the Crown Prosecution Services are doing. How do we break this evil cycle?
Well, by the sort of thing we're doing, people being prosecuted and then discussing what happens when they are prosecuted. I think basically the fundamental problem is that if they're going to prosecute anybody, they've got to prosecute everybody, and that means you're basically calling for the overthrow of the existing financial order. And nobody's got the courage to call for that, because that really means that you've got to change the direction of the way you think about how the financial system operates and what its role is.
Well,
it will come in the end, because all these shenanigans are going to lead, in my view, to another crash.
And
I can't see anything that's going to stop that.
We had something like along those lines happen in Iceland, didn't we, with the arrest of a lot of senior bankers, several of whom were prosecuted, and Iceland is now heading on the road to recovery financially, although it's got a lot of debt.
Yeah, but what you've got to remember is what the Icelandic government did is they said that all foreign holders of accounts in Landsbanki and IceSave, for example, British local authorities, they refused to cover their losses. And the British government picked up the losses of the British local authorities that had lost money, and that was added to Britain's national debt, but not to Iceland's. Now, Iceland were able to get away with that because they're a small fry, and they're able to just wriggle through the net. But of course, ultimately, the losses have to be borne by somebody, and are being borne by the British taxpayer as opposed to the Icelandic taxpayer. Good for the Icelanders, but it's not a general solution unless we're going to go to. We've got to look at the whole picture, and you can't push Iceland as a potential solution for everybody, because the real danger is that if you prosecute properly what's been going on in the City of London, you're basically going to bankrupt it.
One of the big problems here, and I'll ask you the same question in a second, Ian, but one of the big problems here is we've got the 2008 bailout, which effectively was bailing out people who had more than whatever the guaranteed amount at the time was in your bank account, and also bailing out shareholders in banks. And so effectively that was really it would have the only people who had taken a hit if there hadn't been a bailout in 2008 are either the very rich or bank shareholders. We're in this situation now. That kind of happened in 2008. We're now at the situation where we've got a lot of very powerful above the law bankers, and I wonder what you think the solution might be.
It's a very difficult one. I mean, one of the things that Martin just said isn't strictly accurate, because for Libor rigging in particular, the Commodities Futures Trading Commission in the States and various other U.S. regulators and the Financial Services Authority, as it was then called, but it subsequently became Financial Conduct Authority, did actually penalize the institutions that had rigged the benchmark. So, there seems to be two phases to this one. There was the original penalization and, in some cases, admission of guilty pleas by institutions, and there were approximately 10, but I need to check the exact number. RBS was one of those, UBS was one, and in fact UBS paid the biggest fine of all. And the second phase is the prosecution of individual traders, which is what we're seeing now, and which has started with Tom Hayes. So it's not strictly accurate to say that the institutions haven't been penalized. The fines were actually fairly hefty compared to fines that have been seen prior to that. But
do they make a dent in the profits? Because the profits have been massive from the Libor over many years.
They certainly have done in the case of RBS. RBS, as you know, has basically lost $50 billion in terms of declared losses since it was bailed out in October 2008, which is more than the amount of money that the taxpayer put in capital, which was $45.5 billion in October 2008. So one of the reasons why it hasn't been profitable is because it does have recurring fines to pay. And, for example, for foreign exchange market rigging, which is another area that regulators have been looking at, RBS has paid $1.3 billion in fines, combined between various regulators, including US ones and UK ones. So that does make a significant hit on on that particular bank's profit, to the extent that it has not been declaring profits for certainly over the last 2 or 3 years, when it might otherwise have been declaring profits.
But if it's not declaring profits, then surely it's not paying corporation tax either.
No, it's not paying any corporation tax. In fact, it's storing up deferred tax. I can't remember the phrase, but it's actually storing up benefits for the future under deferred tax arrangements, whereby if it makes a loss and doesn't pay any corporation tax, it gets a discount of its tax in future years.
Well, I mean, I have to hand it to you, Ian, for sticking with banking, because to me, it's a little bit like the planning system. It's a bit boring to try and go into it, but actually, it's where stuff really happens, and it's important that people actually get to grips with it. And I know you've written a book about RBS, which is which I'm sure you'll tell us a bit about now, because it's doing quite well, isn't it? I know the Financial Times rate it.
Well, they called it one of the books of the decade, one of the best books of the decade, which was rather gratifying. But it was also named as Book of the Year by Huffington Post, by The Week, and by Bloomberg. So I was fairly chuffed when that happened last December. But the book is basically the story of RBS from its very first, from its origins in 1727, right the way through to its heyday under George Matheson and Fred Goodwin, which was in the 90s and the 2000s, and then the story of its crash, which really was precipitated by its very ill-judged acquisition of ABN AMRO, which happened in October 2007. And then, obviously it became the largest bank failure in history, with assets of 2.2 trillion in October 2008, and the most expensive bank in the world to bail out in October 2008. But yeah, the book's actually coming out in paperback in October, and I'm just currently working on that. I'm writing an epilogue discussing what's happened to the bank over the past...
Well, I'd imagine you have to bring out a new edition every year with an extra chapter on the end.
Well, I know, it's amazing, because, even just in the last 12 months, there's been quite a lot in terms of new fines, new initiatives by the chief exec, Ross McEwen, and in terms of announcements from Osborne that he wants to basically palm it off on private investors as quickly as he possibly can. He wants to wash his hands of RBS, and that's why he sold it at a loss. So why he sold the initial tranche of shares at a loss. Well,
I noticed just in the last couple of days there are accusations that there's been fixing going on, so that the taxpayers getting fleeced again in this latest just this week.
Well, that's right, because on Thursday the UKFI, which is the government agency which is supposedly looking after the taxpayers' stake in RBS, leaked information out into the market that it was about to embark on a sale of up to 10% of the government stake. That knowledge got into that became common knowledge in the city amongst hedge funds, who then started to short sell the shares, and so the shares went down, from I think it was about 350 to 330, so they lost 20p in value as a result of that short selling, which helped the hedge funds to make a fast buck, but it actually meant that the taxpayer got less than the taxpayer would otherwise have got for the stake that was sold on Monday night. So yeah, there's something very dodgy happened, and I think the key thing is that UKFI stroke Her Majesty's Treasury should not have leaked the information that they were about to embark on the initial tranche of shares being sold.
Well, maybe that some of these hedge funds have got spies in the Treasury.
Quite possibly. There's spies everywhere, and in fact, one of the extraordinary things about the Treasury nowadays is that it's a lot of the senior staff are either civil servants who've done 5 years in an investment bank, or they're investment bankers who are going to do 5 years in the Treasury, and there's a massive revolving door between the Treasury and investment banks, and I think actually that is something which probably needs to be addressed, because there's obviously a conflict of interest there.
Yeah, it seems so crooked, Ian. I mean, it's quite depressing. Don't you think it's about time that we brought this into the public sector and managed banking like a utility?
Well, it's interesting, because when the French state bought Credit Lyonnais in the 80s, the bank became even more corrupt than it was when it was in private ownership. And it became a massive problem for the French government. So just the mere fact of having something state-owned doesn't necessarily mean it's going to become whiter than white. In the case of Credit Lyonnais, it actually had the opposite effect.
It makes you wonder whether they're saying, well, if they want to nationalise us and start managing us, we're going to make sure they regret it.
Well, maybe, I don't know. In the case of RBS, there have been various alternative proposals put forward, including one by the New Economics Foundation, which is to split it into about 10 local or regional banks, based, a bit like Sparkassen in the UK, which are actually owned by local government, local authorities, and/or the Länder and the I can't remember what the names are for the regions in Germany. But the trouble with that one is it's in many ways a sensible proposal, because you could hope that you could create smaller units which are more focused on serving the needs of their local economies, and with less capacity to destroy the global economy or the UK economy when they fail, because they're smaller. But the trouble is that as far as the right-wing ideologues in the current government are concerned, that no bank is better off in the public sector, because they have this mindset of private sector good, public sector bad. So the New Economics Foundation proposals, when they were put to Harriet Baldwin, who's the city minister, who by the way worked at J.P. Morgan Chase for 22 years until she became city minister, until she became an MP in 2010, was to just say, look, it's an interesting proposal, but we just believe that things are better off in the private sector.
We didn't even look at it, basically.
No.
Okay, so I think maybe we'll have a little a pact, if you want, you and I, Ian, and that is to get hold of Tom and see if we can get a list from him of all of the senior bankers, that is, bank directors and managers that he was sharing information about Libor with, and make sure it's published. So even if these people aren't prosecuted, at least their names are known. Like, I mentioned Carsten Kengeter, the chief executive of the German bank. We need to get those names out there, I think, so that these people know who they're dealing with.
Well, certainly his dad, who's called Nick Hayes, is absolutely furious about the way his son's been treated, and in his view, scapegoated, and has written a letter to the Guardian about this, which I was reading yesterday. And Nick Hayes is also quite active on Twitter, trying to basically criticize the judge and stand up for his son.
Okay, Ian Fraser, blogger and writer for the Scottish Herald, the Glasgow Herald it used to be called. I think it's now called the Herald of Scotland or something.
The website's got Herald Scotland, yeah.
And also author of Shredded History of RBS. Thanks very much for joining us on the Politics Show.
Good talking to you. Cheers.
Getting bigger by being better. The #1 choice for Bristol. This is BCFM 93.2.